What is going on, everybody, and welcome on in. Happy Friday afternoon. We're going to be diving into the market close here today. I see how things play out into the close, and as we finish up this pretty wild week, we're getting down to some really interesting points. We're going to talk about a lot of that stuff here in just one second. Let me make sure that everything is working here on the stream. It looks good to me. Let's see. Let's just confirm. Put this over here. Everything looks good. So we are good to go. And we'll be going live for about another hour or two, 2 hours or so roughly, for the stream until the market closes. So excited to talk about it, excited to talk about what's going on and dive into some strategy at least talk about what I'm thinking about going into next week. And we'll see. I think a lot of that is predicated depending upon how, the market closes today. So that will be a decent factor to think about. Okay. So first off, let me really refresh this page. What's wild to me is, again, even though it's the same thing we've been talking about for months, it seems like, right? Even though today, as we are live right now, the market is up. It was down earlier, then it came back, now it's up. Even though it's up, right? Look at this, right? Look what's up. Apple's up. Of course, Apple had their earnings yesterday, and they beat. And I don't know if I was necessarily surprised by that, but some people were surprised. They thought, hey, if Apple comes in line or below what they expected, this could be a nasty day. And kind of luckily for the market, I think that didn't happen, right? Microsoft is up. Google is up a good bit. Amazon, Tesla, Home Depot, Facebook. Some of the big names are up, which is kind of holding the indices higher. But underneath the surface, it's a little bit different. Now, okay, most stocks, a little over half are advancing today, whereas we're seeing like 42% declining, but look at this stat right here. Today, on Friday, 1,452 stocks hit new lows, which is, I think that's pretty, that's a lot. That's pretty impressive, and 39 hit new highs. So it's pretty wild action. And look at the 50 SMA. We're getting close to a point where only 15% of stocks are above their 50 SMA, 20% above their 200. We're getting down to, again, we saw some of these levels in December while the markets were kind of inching higher. Now the markets have pulled back, and so with that pullback, you got even more stocks below the 50 and below the 200 SMA. So we're getting down to some pretty interesting spots. So we're going to talk about all that. It's been just dead, absolutely dead in any small cap land. So we'll talk about that. My, at least strategy going forward. I've narrowed it down now to, I got 4. I'm only holding 4. At this point. And yeah, did I add them too heavy too early? For sure, right? If I could go back and reset, I would totally have done that. However, based off historically what we've seen, you kind of get that dead period in that, late fall period, and that January kind of period picks up, pretty nice. And we kind of saw the exact opposite, and the market pulling back in January has been, kind of the nail in the coffin there in terms of small cap land. But the same exact thought process there is I'm not interested in selling them at the bottom. So yeah, my average is horrible for some of them. Yeah, it's horrible. But these stocks, as we've seen, look at some of these names right here. IMPP. Look at this stock. Some of these stocks. It's actually a recent IPO. KSCP. It's also an IPO. TKLF. We've seen some stocks over the past couple of days go on some pretty big runs. So it's not like this is dead in the water and all that. We definitely need a firmer market for small caps to kind of pick back up. But again, if we look over at IWM, it's been weak, right? So while the market's green today, this morning, IWM hit new lows. So until IWM gets back up over $200, ideally 205, I don't think there's going to be too much confidence in small cap land. Now, could there be some really nice bounce backs? And if the market firms up and we go higher and we go back to all-time highs on SPY in the coming months, right? Will IWM bounce back up well into the 200s? For sure. And then I think that's where you'll see a much better, small cap land. But in the meantime, again, this is what's going on, right? So you're seeing this chart set up, and it's not great. IWC, same exact thing. IWC, honestly, we're down to a spot that I kind of like on IWC right in here, if we're looking for a bounce point. So we're getting down to these levels, and, we'll see how this plays out. My guess, though, is that the bottoms are in for now. We'll see. Obviously, let's take a look at SPY here as we speak. And as I'm saying that, we're headed down. We were much lower earlier today. We came down to this level that we had, this 426, which is actually crazy. You look back on the daily chart, that 426 happens to be the lows that we saw from October. We came right back down to that point, and then bounced this morning in pre-market hours and bounced up, went green. We'll see if we can hold VWAP, which we're right at VWAP right now. the way that I kind of see the close of this week is if we close up towards the highs, which, of course, how volatile things have been. If we close up towards the highs, it's kind of going to do exactly the opposite of what it's been doing, right? Whenever we kind of get a move up, we get a sell-off. And if we go red today, well, that'll continue the same pattern. If we don't go red today and we finish actually strong, then I think what this range or this pattern has kind of gotten people conditioned to do is, I'll look at QQQ to show you guys a better view of this. But here's the thing, as you get up into the top of this range, which the top of this range is up over 350, it's time to go short, time to sell. And if that continues to play out, that pattern plays out, right, we should be headed down to this range right here, down towards the lower 340s, 337 range on QQQ. And eventually we get a break of this range and we should see a big move. Now, I feel like a lot of people thought that break would come today, this morning, because it looked pretty glim. Pretty gloomy, I would say, in pre-market hours, and then we'd be held up and bounced. So it seems like every time we get to the end of that, we get to that edge, we get pulled back off the edge, right? We get kind of saved, just barely, right? We get barely saved, and that's kind of what happened yesterday, and I think what happened this morning as well. But if that changes, right, and we finish strong, I think a lot of people are going to be conditioned or have been conditioned this past week to just buy puts at the highs or buy puts up to the top of the range. And eventually this isn't going to play out. So the same idea with calls to the bottom of the range. We break one way, I think there's going to be a very, very substantial move in either direction, realistically. I think that's what we're looking at. So if we go down below these lows right here, this pre-market low, we can probably clear out, Monday's low, I think, very easily next week. I don't think it'll happen today, although, I wouldn't put it past the market today, but that would be some crazy range. It would be impressive, but it could happen next week. Or we finish up towards the highs, and who knows, we could gap up Sunday with everyone thinking, doomsday come this weekend. All of a sudden, futures come out Sunday, and it's like, wait a second, things are up, and people are all of a sudden chasing the move back higher on Monday. So we'll see. That's at least kind of my thought process on the market, at least as of now. We'll see how that plays out. FSR mirroring Tesla. Yeah, Tesla has been, let's take a look at Tesla. It's a funny one. It's coming down to a spot that personally, it hit 792 this morning. It's coming down to a spot that, it's actually hit down to the bottom of my trend line, or my bottom support there, which is pretty cool. It's at the 200 SMA as well. I like Tesla as a longer term hold, and I think my last bit that I bought was somewhere in here, like this. I think it was in the 600s. And it's coming down to a spot after more earnings, after more delivery numbers that I like, and things look really good on that front. This is a solid stock that I really wouldn't want to not have exposure to in the long term, but you're going to play with the market. So the market gets weak, growth gets weak, EVs are getting hit, which it is kind of happening right now. Then yeah, it's going to be one of those stocks that has that crazy reaction. But if things are nice and strong and all of a sudden we see strength and everyone's going risk on and everyone's like, okay, go, go, go. Well, then Tesla's one of those stocks that could go parabolic and go back to, 1,200, 1,500 very, very easily. So from here. So we'll see how it plays out. But the lower these things go, especially Tesla in the EV space, I like that. That's probably my favorite play. Lucid is another one as well. A lot of people are always talking about. Lucid's coming back into range under $30. And, we kind of, I don't want to say I didn't expect it the way it happened to happen, but to some degree, I thought we'd eventually fall off and get down to this range at some point. And we kind of are coming down to that range now, down to lower 20s, I think is a much better buy. They got to prove themselves, though. So at the end of the day, Lucid's got to come out with delivery numbers. They got to come out with earnings. And as things progress and as we see progress there, that's the only way we can really judge it. We can't really judge it based off of right now, because if you judge it based off of right now, the stock's trading a lot lower. But everyone's kind of pricing in the future and everyone's pricing in, all that stuff. So we'll see how it plays out. Bottom for AMC, I have no idea. This thing could keep going lower if the market stays choppy and weak. That's the other thing too with how things have been. Things have been so choppy, things have been so weak that it doesn't, like all these stocks that have been these kind of, I don't want to, you can say meme stocks or even small caps. Just AMC is, I guess, it has the highest weight in IWM. But with all these stocks that have been, with this market action that's been super choppy, this can keep going lower until the market needs to firm up. And even when it firms up, I don't necessarily believe that AMC is going to be one of the first stocks that gets bought up. I think you're going to see a lot of other bigger name companies, other higher growth name companies that were, trading a lot higher that have been cut in half, cut into pieces of where they were, a few weeks ago or a few months ago. Those are probably the first ones I would think about for bounce plays. One of those is Affirm, AFRM, because you can put some solid models behind that and potential growth stories. AMC though, as we get down towards like here, we're getting back towards where it was trading at before the big run up in early or late spring, early summer. So $10 could be a spot to potentially think about, but I mean, it's not something that I'm looking at as a valid or as an idea personally. Affirm's up 9% today. So you see how the volatility here is setting up on Affirm. Look at the volume today too. It's going to be, the highest volume we've probably seen in a couple of weeks, based on, we still got an hour and a half till the close. So this is a stock that I think that could really bounce back very, very hard, but you need the market to firm up. So if the market stays super choppy, it's probably going to chop around, have a big down day followed by a big up day, big down, right? But if the market firms up and starts to bounce, Affirm is one of those stocks that could easily, in my opinion, get back to $75, and that's like a $20 move from here, which would be big. I wouldn't be surprised if it gets back to 90 on a bigger, more sustained bounce. So these are the ones I'd be looking at. Again, Affirm's kind of right down towards its all-time lows. If we go back and draw this line right here, you came down very, very close to that level. So that's kind of your risk point. But again, at the same time, if the market gets weak and we have the next leg down, Affirm is a great short opportunity in terms of puts. In the short term, under that low, under 46.50, this could drop down very, very fast. And you can kind of see, some of those stocks, Robinhood's a different example, but Robinhood is one of those that today had a really good bounce day, but it could keep going lower and lower and lower, especially throwing earnings into the mix. And I have no speculation on earnings for these companies. At the end of the day, it doesn't matter because you got to beat substantially, at least in this market environment, because everyone's fearful. It's just there is fear left and right. So you really got to beat. You got to be able to kind of withstand that. And I don't know if it really matters, to be honest. Sometimes if these companies come roughly in line, they could sell off or they could rip. So I don't know. Visa had some good numbers. Visa beat earnings, I think, yesterday. Look at Visa today, up 7%. Look at this big gap. It's coming up right into an area that could be a good short zone. So Visa today, off the 225-ish area, is potentially a short zone. But if it breaks over 225, look out. Visa could be headed another $10-20 higher if the market kind of cooperates as well. So that's at least another one of those earnings plays from yesterday. Let's take a look at Apple, because I'm curious how Apple is setting up. Apple had a crazy extension off this range. And that's back up there. 50 SMA, couldn't get above that today. That's a resistance right now. So it looks like that 169 or so is the resistance on Apple. But if we look at it now, it's kind of, it's trying to bounce on the VWAP level right there, but it's held up pretty decent. Had that earnings, sold off into pre-market with the market, and then boom, bounced back pretty nicely. So that's holding up decently. Let's see. So here's the thing. If you go back, I don't know why the SPY chart has this weird chart error. We kind of have every single one of these little balances, which actually is a pretty substantial one, at least to the highs today from this pre-market low. So a lot of people don't, and I think it's good to not look at the pre-market and look at futures, because it has been a fake out central this past week with how I really haven't seen. I guess during earnings season, you can get some more action, some more volatility, especially with some of these stocks that have, a 6% weight in the S&P. Microsoft and Apple have 6% weights. It's pretty crazy. You can get some wild action with earnings, but in terms of futures, but the futures, I haven't seen times at least in a long time, or at least any time, recently, where we've seen these moves of all of a sudden within 2 hours of the market closing, futures are up 1%, and then they're down 1%, and then the next day you wake up and they're the complete opposite. So last night, I think S&P futures were looking up almost up 0.75, 0.8%. And then you wake up this morning and they're down 1%. And it's the volatility on just futures is pretty nuts. And it's not even looking at the intraday. Intraday has been crazier too. So you bounced off this 426 level. So actually from that level, let's take a look. From that level right here, this morning double bottom right there, he bounced about 2.5, almost 3% right there, which is pretty decent. But that's been the range. Now we're headed back down towards, we're not really that close to the lows of the day, because we were, red by a little bit. So we got a decent ways to go to the lows of the day, although we could go red right here. So let's see if it holds up. It's breaking below VWAP, and it could easily go red. And that's been the trend. Every time this rally kind of gets stalled out and can't go, that rally kind of fades, and it breaks VWAP, and it kind of goes red. So if we play out like the past couple of days, I'd expect expect things to go red, although I have a suspicion that that may not happen, although, and we'll see how that plays out. Market never repeats itself, same way predictions on Google into earnings. I have no idea. Realistically, I have no idea. If you look at, let's just take a look at Google. I don't have any people who are saying too, like, they know it's going to happen. No one has any clue what's going to happen. I think it's very apparent, at least in the recent environment. We'll see though. Google is kind of putting in higher lows here, so again, it's still building higher lows. It doesn't have a huge. I think it has like a 3% weight, I believe, in the S&P, so a little bit of a lesser weight or lesser effect. So that's why I think the bigger names, Microsoft and Apple, out of the way. Those are the big drivers of the market, I believe. We'll see how Google plays out. I don't think it will be a huge swing in the overall market, depending upon what happens here. But positive earnings here wouldn't be a bad thing for the market. So we're kind of at an interesting level too. We're at this point where we kind of had the lows, these bodies of the candles back in October. This is back in September, October. That was the low we saw on Google, which also was the low that we saw on the initial pullback here on the 10th. Bounced and then failed right through, and now we're getting rejected. We have like a triple top, actually. Let's look at the 1 hour chart. Yeah, we now have 3 days in a row where we can't get above this 26.55 level on Google, roughly. So, roughly 26.60 is kind of your line in the sand on Google. If we get above that, that's a good sign. But if we can't, that's kind of like you can look to short. I mean, it doesn't matter. For a trade idea, you would look to short against that level. And once you break above, get out of the short. So shorts up against that have paid the past 3 days. The short off of these moves, right, works until it doesn't. Again, this chart looks a little bit different than the S&P. Google's chart looks a lot firmer in terms of, had the big bounce or had the big dip Monday, sold off again Tuesday, Wednesday did its thing. It's chopped around, Thursday, and today Friday decently, bouncing off the lows. So it's building it's building higher lows. It needs to clear this 2660. And after that, that's looking like you got some free sky. You potentially have some open skies and open waters for a bigger move up. We'll see on Google. Google's below the 200 SMA and the 50. So Google's one of those stocks in that. If we go back to here on FinViz, it's one of those stocks that fits that falls into the below on the 50 SMA and the below on the 200. And as we speak, we've actually just dropped to 15% and 20% on the nose for both below stocks below. Or stocks above the 50 SMA and the 200 SMA. So a lot of momentum indicators are, moving in the opposite direction in terms of a lot of stocks. For now, we'll see if they act. They will be at least indicator resistance for now in terms of a lot of these stocks. We'll see how it plays out. Dow, Nasdaq, S&P identical charts today. They're pretty close. The Dow. Let's just take a look. Let's look at them. Here's Google. Let's look at the S&P. Here's the S&P. Here's the Dow. And here's the Nasdaq. Very, very similar. Although the Dow is down. The Dow is down about 0.2%. So it seems like the Dow has been definitely the lagger in terms of like on up days it's down less, and seems like on down or like on even days it's always been kind of down just below the S&P and the Nasdaq. Until we get a better sense of direction, it's been tough to kind of figure out the leaders and the laggers. They're all kind of in. And don't want to say they're all in line because they're not going to all be the same. They're not going to all have the same type of move. But the Dow has been in times of weaker tech. If we just take a look at the overall chart for the Dow, right? The Dow from its highs, let's just look at this. From those highs we saw to Monday's lows, it was down 10%. And from the highs, the Dow is down about 7.75% right now. That's a completely different story on the NASDAQ. If you go to the NASDAQ from the highs, or we'll just go back to these highs here at the end of the year, to Monday's lows down 17, and to now it's down about 15%. So significantly more downside there on the NASDAQ. And then the S&P from the highs, you are down about 12 to Monday's lows, and to now you're about down 10. So the Dow has held up better relative, just bigger picture. But all in all, it's down today compared to the other indices, right? Google have exit revenues, no doubt. I mean, I hope it would be nice to see. I would like to think that, right? But I'm not going to make any. Obviously there are a lot of analysts and stuff who do great in terms of. I don't say great, but they do a lot of modeling, and there's a lot that goes into it. So I really have especially in this market environment too. Everyone can have their projections, but then what the market wants to do and what the market reaction, that's been the opposite. So it's funny because we've kind of seen, honestly, that while the market's been in this kind of weaker, it just kind of, you get the feel that whether you're looking on social media or whatever, just to gauge sentiment and, CNBC and whatnot, to gauge sentiment, it kind of just feels like we're hanging on the edge by a thread. But these earnings could have totally just killed it, right? If Microsoft and Apple tanked on earnings, that could have been the big time downside move, and we could be looking at a much bigger downside. But they've somehow they've held up, and Apple's move today is pretty impressive, to be honest. Although it doesn't really seem like it's, I don't know. I think it's saving the market more than people think. Although at the same time, it's only 6% on the S&P. There's a lot of other stocks in there that make up the S&P, so it's going to do what it wants to do. Son had some volume today. Let's take a look. It had some. I can't just. It's had these pops and these little periods of time where it gets these volumes. Again, these things, small cap land has just been a desert. It's been so dry out there, and it's just been wasting away. My biggest thing that I've learned, I guess, you never necessarily knew it could time exactly when you kind of go into a bear market for small caps. But if you go back to IWM, right? Let's look at IWM. If we pull it up, let's see, how far is it off? Yeah, it's off a lot off the highs. IWM off the highs. This is small caps. This is down 22% off the highs. Pretty bad. So that's a bear market technically, right? When you have a 20% move off the highs, a 20% decline, that's technically, the definition of a bear market if you look it up. The problem with small caps is that you kind of went through this chop. Obviously, we understand that we had this parabolic move last year, right? So everyone made a lot of money. And it was a great time in this parabolic move in 2020 into 2021, which was awesome. But then you obviously have the backside at some point of these trades and of these charts. If you look at here's the weekly chart on IWM. Now it's correcting really, really nice. I mean, it's a good thing at the end of the day to see this pullback. But when you have a move, right, in a span of like a year and a half from where it was of like 145%, that's insane. I mean, at the end of the day, these types of moves, what I think we've learned, or now we're seeing it a lot better, is you get kind of fearful when you're shorting into parabolic moves. And everyone kind of talked about, I think I had a video a while back. At the time, the trade wasn't really meant to be that big a deal. It was Tesla. It was a Tesla short at the time when Tesla got up into this range somewhere up in here. And I remember I think I stopped myself out, and ultimately if I was still in the trade short, I'd be up pretty nice, right? Whatever percent wise, I'd be up 20%, whatever it is. Doesn't matter. But you get scary, you get kind of scared of shorting a stock into these parabolic moves. When you're shorting stock, it's one thing. When you're playing options and you put a time limit on it, it's a whole other game, right? But you get scared of shorting into parabolic moves. But I think what we've learned is that give it time, give a lot of these stocks time, and these parabolic moves come from the downside. Now, the easy money you think is in small caps because you can short parabolic moves. The problem there is that when you're dealing with low floats and you're dealing with high short fees, essentially, borrow fees, high borrow fees, hard to borrow fees, like it doesn't make it worth your while. But on higher beta stocks like a Tesla, or now we're seeing plenty of these growth stocks, Cathie Wood, look at any of Cathie Wood stocks, ARK stocks, just look at ARK. When these things go parabolic, you don't know where the top is going to be. But if you have a strategy in place, a lot of these are really good short opportunities. And I think the exact same way with some of these bottomed out plays. And I think your risk reward is obviously better on the long side buying bottoms than trying to short tops when you don't know when the top is in. Obviously, you don't know when the bottom's in, but you also do have a feel, and the market's going to have its waves ups and downs. You have a feel for fundamentals, okay? We're looking at a lot of stocks now in at least the biotech space. I'll pull up XBI because here's XBI, the biotech ETF. I think it's crazy to look at. Now, XBI is actually down today. It's down to 85. It hit new lows early this morning relative to where it was. This is the weekly chart on XBI. Another thing to also note too is that we have not had we've only had three periods of time since 2015 where the S&P has been down for 4 weeks in a row. If we close under 438, which it looks like we probably will, unless we have a massive rally into the close, we'll have a fourth red week in a row on the S&P, which is pretty impressive. XBI is setting up for 1, 2, 3, 4, 5 red weeks in a row. So a little bit more pressure there, obviously, as it's been kind of a higher beta. But this is one that's crazy too, because there are with this sell-off. Again, this XBI ETF has only been around since like 2006. This is the biggest. First off, this is the biggest sell-off it's ever had. So look from highs. We have a sell-off back in here in 2015 into 2016. You go from 91 down to, you think it's pretty bad, right? 91 down to 44. That's pretty bad, a 51% decline. 51% decline is nothing compared to this. Well, actually, I think it's close. We're down about 52 roughly. So we're actually just touching that. I think I saw a stat this morning that we eclipsed that pullback. So it pulled back the most it's ever pulled back in its history since 2006. So it's pretty crazy to me to think about for biotechs. Now, obviously they had a crazy run, pandemic, and they didn't get crushed with the pandemic. Look at this. This is the March pandemic, right? Now, I guess it makes sense because a lot of these biotech stocks ended up dropping, COVID PRs, and all of a sudden it was COVID PR central. So after about a week or so, let's go back to the chart, the weekly chart here. After about a week or so in the 2020 pullback, right? Or a couple weeks, they kind of realized very, very fast that, hey, COVID PRs were popping off. And if we come out with a PR saying, hey, we're looking to do some research into COVID testing or this or that, boom, the stocks will explode. So they kind of bounce really, really hard off of that. But this pullback is insane. So again, we don't necessarily know, I guess I'm rambling, but the whole big picture point is that we don't necessarily know what the bottom's going to be. No one knows. But individual stocks here, more and more stocks in the biotech space are trading at cash, are trading very, very close to cash, with products in the pipeline, with research being done, with very, very promising things. There's a lot of trash out there, but there are promising ones. And then there's even, small caps or micro caps that are trading, 3 times below cash. So like you have a stock, I think one of my stocks, I believe has like 60 million. Our last report had like 60 million in cash. And the stock is at like a 20-something million market cap. You're talking about a market cap that's 3 times below the cash value of what the company currently has on the balance sheet. Now, there's expenses, and we also know it doesn't mean anything, right? You got to have products and you got to have a future, because if you can have all the cash in the world, but if everyone knows you're going to burn that cash over the next 6 to 12 months, no one wants to buy your stock. You got to have a little bit more than just cash, right? But still, at the end of the day, right, with a firmer market environment, a lot of these stocks people are going to look at and go, wait a second. So buying the bottoms, in my opinion, is a lot better to try to time that, because you can at least use you can use fundamentals. You can, of course, use technicals. Of course, technicals in crazy market environments doesn't really matter. They do and they don't. In this case, stocks could break down below supports and go lower and lower and lower, which we're seeing. At that point, it's like, wait, what now? What are you doing? Then you got to kind of think about fundamentals, and then that's kind of where the mix or the blend of the two is useful in trying to identify deals and trying to identify stocks like that. But you have a better chance of figuring that out and getting a better feel, or having more conviction, or having more confidence behind that. Because on the short side, if you're shorting tops, you don't know where the top is going to be, and you know that your risk is essentially infinity. Eventually, these parabolic moves will have a backside, which we're seeing right now in a lot of stocks, but and that backside can be very, very big. But you don't exactly know when that's coming, right? I mean, no one, and that's the danger of it, right? All right, so as we've been speaking, SPY just made a little reversal here. Look at that. So SPY just dipped just below VWAP, and now it's bouncing. So look at this. If we get back up to the, we got close. But so we go back to here's the weekly chart on SPY. For us to have 4 red weeks in a row, we would need to close under this right here. So it looks like if we get up over 438 under this candle is going to give us a 4th red week in a row. But if we get above 438, which we're about $3.50 away, we will not have that 4th red week in a row on the S&P. It's possible. We still got a little bit of work to do in terms of the close. We got up there. We got close. We got about 50 cents away at the highs, and we're we can see how this volatility is. We can be very right back to the highs in 2 seconds. So we'll watch that and see how that plays out. But that's at least what I'm looking at as a cool stat in terms of, hey, it's only happened 3 other times since 2015. And actually, the COVID crash wasn't one of those times, believe it or not. We had a bunch of red weeks, big drawdown, but in between, we had a bounce week where we actually finished green on the week. So it's pretty interesting. Won't be surprised if people taking profits or bail in the markets in a day for fear. Russian, yeah, that's possible too. Very, very possible as well. I think that the thing would be, and that's on a lot of people's minds, I would imagine. However, if we don't, and then we open up Big Monday or we open up Green Monday, that could bring in a lot of chasers and that could really solidify potentially the bounce. We'll see. That's kind of what I'm looking at. It may not happen, but if it does, I think that would solidify a bounce, and we may be very well back on our way to the upside if that happens. Nothing really comes over the weekend of Russia. Who knows? If maybe there will be some news and that changes everything. If nothing comes of it and things are kind of quiet on that front, potentially we wake up Monday and all of a sudden, markets are up, 1%, futures are gapping up, and all of a sudden it's like, wait a second, everyone's chasing back in or panic buying back in all the stocks that they sold. It's a possible, possibility. Spike in the VIX. Let's say how is UVXY looking right now? Let's see. UVXY is it's at 1836. It's down a little bit today. It's been interesting. Look at this thing. It's kind of it wants to pop. It's building higher lows the past 3 days, right? It wants to pop. It hasn't bled out. And I think this close today could be a pretty big indicator of what's going to go on there. This could bleed out potentially. If it drops below today's lows, maybe make a shot down towards, yesterday's lows, but we would need a big rally for that to happen. So that is, I would be, well, we can watch that and see how that plays out, but I'd imagine if the market goes up, this is coming down. Roughly. By the way, Boyle, Beach Bum's Boyle call is a killer. Look at this thing. Look at Boyle. I'd say it's pulled back a little bit from the highs today. This we were talking about on lives, and this is nuts, but look at that. You got to give credit where credit is due, right? Beach Bum with a call out on Boyle a couple lives ago, back maybe a couple weeks ago initially, how it was coming down into this range. And we're like, yeah, this is actually not a bad range. And boom, natural gas ETF, right? From some of these lows, or from the lows, popped up over 90%. That's a killer play. And I think it's kind of how I'm looking to play, what's it called? My biotech play, LABU. So I'm looking for the biotech bounce. This is up barely today, but I'm looking for look at how much volume this is seen though. Look at the amount of volume, LABU. This is a very deadly, I don't want to say you have to understand your risk. And so I actually locked in gains on one of these contracts and I ended up buying it back for actually less than what I paid for it originally. But I have March $20 calls on LABU. LABU is the 3 times bull ETF for biotechs. So essentially, right, if XBI or biotechs, right, if XBI is up, 1% in a day or makes a 1% move, then LABU goes up 3% roughly, right? So this is a risky play because this alone, right, has made a massive pullback. If you go back to where the highs were on this, let's go to the weekly chart on this. This from the highs, 185 down to 15. Actually, I think it dropped just below 15. Down 92% from the highs. Now, obviously, when you have a leverage ETF, that's what happens. But if we get a bounce and XBI bounces 20% or bounces 10%, this could bounce right back up into that 40 range. And that 40 range, by the way, guys, is not even that big. It's not even back to where it was. This could bounce up into that 40 to 50 range if we have a very big bullish movement on biotechs, which would be a 200% move on just shares. So I'm playing options on this, which is very risky, but risking like $600. Actually, in this case, because I locked in gains, I'm actually probably risking only like $500 net on the trade. So that's how I'm playing it. But this could be a 1, 2, 3, 400% type of trade if things play out over the next 2 months. I'm looking for that 2-month move. Ideally, I think we have a potential bounce time right now into the next Fed meeting. The other thing we'll talk about too going forward, and we'll see how it plays out, but I've been starting to see sentiment shifting a little bit in terms of the word on the street in a sense, in terms of some of the sentiment, right, in terms of the Fed and needing to raise rates and all this stuff. I think we can all expect rates to be raised on the next or by the March meeting, but what if it doesn't happen? I think that's something that we have to think about too. What if it doesn't happen? What if the market or the economy weakening ends up being a bigger factor or playing a bigger role, and all of a sudden the Fed's like, you know what, we're actually good right now. We don't need to raise rates, and we're going to wait to the next, and we're going to take it as we see it, but we don't need to raise. We're not going to raise rate. The decision was made not to raise rates right now. that could be the next. That could be the next piece for a bigger move up. Let's see. I'm gonna go back through some comments. Let's see. Waiting here. Sanctions passed or imposed. Yes, that's true. I'm not sure if TA is a good reason to enter a trade on a commodity, but great call nonetheless. Yeah, that's very true as well. Okay, see SPYs now. It's kind of getting back up into the consolidation from the high, so we're getting up there right now. Now, time to watch the short natural gas using cold, KOLD, and short oil. I like the oil short play. I like that a lot. Here's drip. This is like the 2x bear ETF for oil. I like this idea, to be honest with you, a lot, to short oil. So I kind of think this is a solid play with just shares. You can play options, right, on it? Yeah, I guess you could play options. Are they liquid? There's not too much open interest, so I don't know if it's really worth it. I would just play shares. Maybe if you want to grab a few contracts. If you really want to short oil, then you'd probably look to go with like 5, I would say 450s or 5s. So they even have they don't have 4. You go to $4 calls or something like that, or even 5s potentially if you want to play it that way. But shares are probably a better bet if I had to pick a move on that. But yeah, going back to that biotech trade though, like it's like the LABU. I love it, but it's super risk, so you can't go heavy. Now, could that be like one of the most legendary trades of all time? And I'm not really, but like, could it be a legendary trade? Had you gone heavy, a full position size, or let's say a big position size into some of these $20 calls, right, for LABU, and we get a biotech bounce in the next 2 months, and LABU goes to 25, 35, 40. Which isn't that unrealistic, right? Let's be honest. Isn't that unrealistic? If it goes 25 plus, those calls are up a couple 100%. That could be a killer trade, especially if it happens sooner rather than later. The sooner it happens, the better that would be, because then you still got all the time on your side, and it could be monster, absolute monster. Lucid got a long call at 25, way too cheap. Let's take a look at Lucid. I would agree with you, to be honest, because it's come back into a range I like. Although this is a pretty wide range. So it's down a lot past 3 days alone. This week alone, it's down a lot. The problem is that if it was down towards 20, I would like it a lot more. But again, if the market bounces and firms up, this is probably one that can snap back up and be at 35 just like that, right? Which is this is a very, very volatile play. If you're playing options too, right? This can be back up into that 35. Just make sure 35, 36 was a prior support. So look at how it kind of played out this week. I just erased one of those lines by accident. That played out really, really nice. Look at this. If we zoom in to that level, this 36 level was our support. Very, very nice. We dipped below but regained it. We kind of had some chop, it looks like last week, right? Was the 24th? Was that Monday? Yeah, that was Monday. So we had some chop under it Monday, regained it, okay. Then we started to fall below it again, and it showed some weakness signs. Boom, this started to crack down, and boom, past 2 days, it came down like $10, very, very fast. So that's a pretty big move down on Lucid, by the way, from 36 to 25. That's 30% move down in just like a matter of a couple of days. That's pretty wild. But just like that, it could snap back. Same thing. This thing held that support and went from 36 to 46 like that. So I can see it. If we have a bounce back week next week, you can be back up at 36 pretty fast. Again, though, with more choppiness and weakness in the market and weakness in Tesla potentially, EVs, they've been a little iffy as of late. They have. Let's see. Also, this is another play too that we were looking at. Look at this. Remember this? Remember this stock? How I was going short on this stock a couple weeks ago, or about a week and a half ago. And I was up in here, and I had a 950 average, and I wanted to get a little higher. It never got to the second zone that I wanted to add. I ended up getting out of this because I get rid of that alert because I needed the cash to bolster other longer term or other option positions that I wanted to add to. But it ended up working out really, really nice. So we got the flush out big time. We had even one day where the thing went from, had a range from 12.23 down to $8. So you got the flush out, and this thing is dead. This honestly isn't a terrible idea. Now the risk reward isn't great, but it's been when you get these flush outs, these are really good plays to, okay, the trend is broken, the party's over. there's probably a short opportunity, and you can look to short the pops every day almost. So this thing has popped up pretty much, every day since that big flush out. And this is the big flush out on the 24th on Monday. And then Tuesday comes along, it tries to pop back up, tries to go green, gets rejected up in the 10s. Over 10 would have been a good short, and you ended up getting down into the 8s again by the end of the day. So these are good day trades and good stocks to have on radar for day trade opportunities. By the way, SPY just ripped. So let's just take a look at SPY. We're right back up into the range. So this is where I think it could be a little squeezy into the end of the day, because we held roughly, we dipped just below VWAP and held up. But I think the intention or the sentiment or the thought process behind a lot of traders or people in general this week has been, hey, we start pushing up, we're looking nice, short those pops, and this thing is going to go red. And it got close. We got close to going red. The Dow went red. But now SPY, the S&P, is bouncing right back. And if this thing breaks high of the day and we go up over 438, number one, we're probably going to close green we're going to close green on the week, which is impressive. But that said, also, this could be setting up for a bigger squeeze next week, because we may have people who go short and are going to get squeezed out next week, and then are all of a sudden going to be coming chasing back to get in long. It's kind of just the reverse psychology of how things work, right? If it's the same thing that, you'll hear, any, investor, Warren Buffett, it's the same concept, but just on different time spans. Buy when there's blood in the streets, buy when no one wants to buy, buy when it's buy when sad and sell when happy. When you're taking screenshots of your gains, you should be taking some profits, right? Is kind of how you see it. And when you're crying at your account, looking at your account balance and you're crying, that's when you should be buying or holding, or, obviously to some degree, right? If you're holding random stuff and you have no plan and strategy, then it's a whole different story. But if you have a plan and strategy and nothing has fundamentally changed, those are usually the times to buy. Obviously, unless, some bigger market correction does happen, which is very, very possible, although we've surprisingly been strong on these lows. So I'm kind of surprised that we didn't go and break those lows this morning. Yesterday afternoon kind of held up. So it was some surprising strength, at least in my opinion. I also been following some people who have been looking at like option flow. And just this week alone, or at least the past 2 days, notably, they've been noting that a lot of put options, whether they were longer term or shorter term, they've been getting closed out. So a lot of people who played the downside here have been closing out their puts this week. And we'll see. I don't know if we have necessarily a clear view of, okay, there's a lot of, call buying and whatnot compared to puts. I can look at some of the put call ratios, and we can take a look at that in a second too. But a lot of puts have been getting closed based on some of the option flow we've been seeing. Went long GLDI on the dip. Gold placement with the dividends. Nice. Let's take a look at that. I think gold is, look at this. This is down here to this level right here, down to that range. Again, right, playing support, play on this isn't necessarily maybe the best idea, but it's still not a terrible, I don't think it's a terrible buy zone right down here on this dip for a bounce back up and a little dividend action. What could be worse? There's not too much worse than a little dividend, right? I want to do that. I want to build out a really nice dividend portfolio this year. That's kind of one of the plans. I'm probably going to do it on M1 Finance, I think. And just kind of or maybe even public, is just have different portfolios, different accounts, just for different styles. So I have a video that I'm going to have going over essentially the losses from the past 6 months and what I've learned from the losses and from the downside that I've seen on this portfolio, on the Webull portfolio. And I think the biggest takeaway is kind of a little teaser into that. The biggest takeaway is I was just meant, whether I realized it or not, I was just confused because I was trying to do 7 different strategies all in the same account, which is fine, but you're mentally not going to be there and you're not going to be consistent on that one strategy. And also the other problem behind that is that, okay, you have 7 things going on. You have a long-term hold. You got a day trade here. You got a short here. You got a swing. You got a small cap. You got a large cap. You got options. It's you're setting yourself up to fail. I think that's a lot of people's problem. But the problem is, with a smaller account, people don't want to split that money up and they don't want to just stick to one thing. But when you stick to one thing, you can get very, very good at that one thing and you're all in on that one thing. The biggest problem, at least the biggest drawdown, was when I started doing more things in the same account. On top of pair that up with the small cap bear market that we've been seeing and the slashing of growth as of late. And the market's been, I just personally never was one to trade actively the FANGs or the large caps like that, the super big large caps, the Apples, Amazon, stuff like that. Those could be great for, longer term portfolios for a different style, but I want to kind of solidify that and separate that from my day-to-day, at least active stuff. Because for me, those long-term holds, there's no need to look at that every day. Every couple months, check in, see what's going on, add some cash, set up some recurring deposits, and that's it. Or recurring investments if you want to do that. Add some SPY, add some whatever, add some VOO, some Vanguard, S&P ETFs, whatever. But I shouldn't want to look at that every day. So I would rather, at least going forward, is have much more of a short-term or just trade focus. And at some point, we're going to probably get to a point this year where the Webull is cash every night. That's at least where I'm going. But it's going to take a little bit of time to manage our way out of the trades we have. And I'm not going to just sell stuff at bottoms. I still want to let things play out. And then as things play out, going heavier cash and moving our portfolio around of just saying, okay, take out $5,000, take out $2,000, put it in this account, solidify that, set it up, forget about it, buy the dividend stocks, fractional shares of Tesla, get some Apple, get some Amazon, whatever I want to buy for the long term, and shut up and put it away. And then we can come back to that like every couple months and talk about what's going on there, at least what I'm doing and how it's playing out and all that stuff. But then be more active and more short term in the Webull account, because I like trading on the Webull account more actively. Day trade, it's fun. I really like the platform and all that stuff. And so Trade Zero will probably be the one that I'll use for just shorts and stuff like that. Or maybe I'm thinking interactive brokers as well. It's a good one. So we'll be using set one account up just to short. That's it. That account is only for shorting, right? And it just makes it easier on my brain. I can go into look at this account. I'm in this account. I am only shorting on this account. We're looking for this setup, and that's it. And I think it's a great way to do it. But we'll see how it plays out. That's the plan, at least going forward for this year. We'll see. Agree, keep it simple. That's the whole thing. I definitely got away from that, and then pair it up with how the market's been, and you can see the recipe. The recipe's not a good one for sure. But you live and you learn. So I think it's a great learning experience. For me, and I think hopefully for other people too, who can see that and learn from that and say, hey, this is not what to do for myself. Or maybe you are able to handle and juggle 7 things in the same account. I don't know. I can't. I just know I can't do that. And then, you live and you learn. Okay. Let's see. I have, and it's funny because I was just talking about this too. In my Robinhood account, I have a Robinhood account, right? Now, crazy enough, Robinhood got rocked on earnings yesterday, but then it bounced back super hard today. Let's look at Robinhood. It's actually pushing up, may even go for a high of the day. This is a wild range. I mean, from the bottom, right, from the lows post earnings, right, to today's highs, less than a day goes by, 30% move. You could have bought Robinhood and you could have taken profits. If you bought after that earnings crash, you could have yesterday, right? You wouldn't have to use a day trade and you could have taken a chunk off. Let's say you bought, 100 more shares. You could have sold 25, 50 shares quickly. Yeah, you average down, but you lock in some gains. If it pulls back again, you can buy back in. So that could have been a really fun thing, or at least a really cool thing to watch, or at least, take advantage of if you were playing Robinhood for the long term. I think Robinhood under $10 was a great buy. I've been saying, hey, longer term view here, obviously crypto is a big player, but longer term view here, I think Robinhood has some value. I know people don't like it and they don't like the CEO, but I think it's potentially getting to a point where this could be a decent longer term play. I would say I like SoFi better, but or I guess in the crypto space, people like Coinbase better. I know they're similar in a sense, similar models, different companies obviously, and different niches, I guess, if you want to say it that way, right? But that was wild on Robinhood's move yesterday. But in the Robinhood account that I have, that account, when I'm not taking very many day trades, I'm taking very short-term swings, on options and day trades when I see them. But that account is just I'm having more fun there. And I just cashed out a couple $100 and paid off I paid off one of my loans, or paid off a good chunk of one of my loans that I have from school. It's been fun. And I'm like, why am I not doing this with bigger size? But it's because I kind of let myself get caught up in a million different strategies in one account that, pushed me away from that. And I'm also the person who, I was just saying this to someone today too, I'm also the person who is very much I want to improve. It's kind of ingrained in my fitness, I guess you want to say it that way, from high school, I was always kind of working out and trying to get better in terms of every single day, every week, improving day to day, week to week, month to month. And then you look back and say, hey, I didn't see much day to day. I didn't see much week to week, but I look back at the month. Wow, I can notice a change, or I can notice a change here, whether that's working out, whether it's anything. And so the problem is that when you're swinging so much and when you're relying on swings, you kind of rely on the market and you're at the mercy of the market. And so, yeah, when the play works out, you can make a lot of money on swings, but you're at the mercy of the market when that happens. And so I just personally don't necessarily like that. I'd much rather be someone who can take advantage of any conditions at any time and not have to worry about, oh, the market's down, so my portfolio's down. Well, if the market's down, I want to be looking at puts. Like I want to be looking at the backside or maybe reversal trades. And so you can make money any day, every day. Obviously, you're going to have red days and red weeks, but that's kind of how at least my mindset is. So I want to be able to do, or at least take more advantage of that going forward this year. I was doing the exact same thing, and I am rebalancing right now. I think a lot of people are in the same place. They try to do too much in one portfolio. All right, SPY and QQQ turning down, SPXU and SQQ moving up. Let's take a look at QQQs. Okay, so we're actually at a key point here. SPY, we're at resistance right now. We're up towards the highs of the day. We are at resistance, but if we can blast through, we got an hour to go or 50 minutes to go. If we blast through here, this could be we could pop to 440 by the end of the day. I wouldn't be surprised. Like a very parabolic move up. If we pop it, we got to pop that, and then we kind of get to I would say yesterday's highs. Aren't out of the question up to that 440 to 441. But that would mean we need to break this range. We need to break out because this would signal the opposite of what everyone's expecting. Almost everyone was expecting this pullback that we just saw, about a half hour ago to continue, and we go red. We got bought up and it bounced, and now all of a sudden everyone may be looking at, okay, I'm going to rebalance. I'm going to re-put myself into puts here, re-add to puts, and I like the trade idea. I do, based on the history. So we're up into a spot where, hey, I like this idea, but if we break out of this range and go to the high of the day, I get out of puts, and this could go for a nice breakout up for a much bigger move. So I'd be looking at, I think even SPY calls. I have three. I added one more of them. I'll pull it up. Where are they? Here they are. I think I'm roughly at my average. So I have an average of we're actually up $1 or up whatever, a cent. I have an average of 177 on 3 of these SPY contracts. These are SPY 500s. Risk. It's such risk, right? I have SPY 500 calls out to June 17th. So that's betting on a move. No, it's obviously not. We can move up to here and they'll be up a good bit. And I can take 1 or 2 off and lock in some gains. But if it happens, right, that would mean that SPY has to make a 15% move in the coming months. Wild move, but if you kind of play off of a macro view and a potential this being a balance point and the Fed maybe coming into March goes, hey, we're actually not going to raise rates this month. That could be the setup for a bigger move. So I'm playing that idea. Now, obviously, if we bounce up, I'll take 1 off and I'll only have 2 left. And then if we keep going higher and hit all-time highs and get up into that close to 500 range, I'll take the second 1 off and then I'll hold 1 for fun. At that point, that 1 contract will probably be free. I have already locked in all the gains. I would have locked in gains and it would be holding a free contract. And so that would be the idea behind that. But that's at least where that's what I have personally, buying into the fear, I guess you can say. Here's SPY. It's getting close to those highs. It's getting very, very close to the high of the day. We'll see. I maybe expect like a pullback here and then a potential, if it pulls back and then it can get back again and it could buyer step in, it could break it. I would say it probably breaks out on that next attempt. Unless it just wants to go straight up right here, which we could easily see too. Hope it closes red, then I feel like we can reverse next week. Closing red would be really impressive. I think people will be very, very fearful into that if we close red today, because that's about a 1.5% move from here. We got to go down, or a 1.25% move on SPY that we have to go down and can give back in the last 50 minutes. That would be a nasty sell-off, but hey, I wouldn't put a pat. I mean, we've seen some wild stuff like that happen, so I wouldn't be surprised either. But I guess today, if we just broaden it out, has the range tightened up at all? Let's look at this. So not really, because from today's lows, pre-market wise, we're at like a $10, $11 range, which I guess is a lot, right? But compared to let's look at yesterday. It's similar. Yesterday's range from the highs to the lows was roughly about 11, 12 bucks. And then Wednesday was wild because we had, Wednesday was a nuts day. So the range is tightening up a little bit. If we do go to new highs, then that's not the case. If we break out to new highs here, then the range is pretty much back to what yesterday was and potentially more than yesterday's range. So then, I guess not. But if you go from intraday range today only though, intraday range today, about, 9, 10 bucks so far, a little bit lighter. So the range is tightening up a little bit, and I'd expect it to slow down in terms of these wild ups and downs, but we'll see. I have also Affirm calls in my Robinhood. I have Affirm. Let's look at what Affirm's at. I bought these because I bought them earlier today, so they're up a lot, actually. Let me double check on them right now. Let's see what they're up. These calls I bought Affirm 2/4, so February 4th expiration date. I bought the $60 strike, so I bought 60 strikes, so they're up here. So we're actually only $2.5 off that, which is not bad. But I bought them, I don't know if I bought them, I didn't buy them at the lows. I bought them somewhere in here, but they went up a lot from that. I bought them at 153. They're worth 275, so I'm up 80% on those right now as we speak, which is cool, but I think we can go for more if the market kind of stays strong into next week. We'll see. But that's a while. I like Affirm's chart for that rebound play because this thing has been just very, very volatile. I mean, on any bounce, any relief bounce, also the volume here is very, potentially very telling of how very nice the volume is today. Any relief bounce, Affirm can go to $70. We just need a continuation bounce for 2 days, maybe 2-3 days, and it goes to $70. I think easy, maybe more. 90 would be my next level. 90 is like my next target if we get a really nice sustained bounce. We'll see though if that plays out. So SPY, go back to SPY. Pull back a little bit. So here's that little dip. So if you're quick too, there have been some good ranges to play off. If you're quick in terms of option scalps, that was a good. This still, if you were starting to snag some contracts, depending upon the contracts you bought, you'll probably be up a little bit right now as we speak, and you can take some profit into this move, and then maybe we get a bigger downside move, but we'll see how this goes. I would say as long as it holds up over like 434.50 into the close, we got a shot to hit those highs. It's got to just kind of hold this low from midday roughly. We'll see if it does. And then what else? Let's take a look at the Dow. What's the Dow? Is the Dow at the highs yet? Dow actually got very, very close to the highs. Now it pulled back. Dow has got like a triple top right here at 344. So that's pretty strong resistance right there on the Dow. Is that a key area? Well, that 344 was the after hours highs yesterday. Yeah, kind of. Also lines up with some of the lows we saw back on the 26th. Was that Wednesday? Before the Fed meeting. Okay, so kind of a key area on the Dow. Let's see. I want to go back and check on FinViz and see what those numbers are looking like now. Let's see. So a little bouncy with the market pulling or pushing back up a little bit. But, this is nuts, though. Almost 1,500 stocks hitting new lows today compared to 42 hitting new highs. Just shows you, it really shows you a big difference across the board. Let's see. I'm going to look up percent of stocks above and below. Let's look at this chart again. I want to see how we are compared to back in December. Okay, let's go to this. Draw me the chart, please. Go back to past 3 months. We're actually, look at this. This is wild. Wow. We went lower. We went lower than that. And I'm not surprised. So this is a percentage of stocks above the 50-day moving average. So what essentially it's showing us right here is that we saw at one point in December, we broke below a lot of tax loss harvesting we're talking about, right? We broke below 20% of stocks above their 50-day moving average. And now we actually saw this week, we went lower. We went lower. On Monday, we had a low of 15.52% of stocks. And today we're actually roughly right there again. And now we can look for the 200 too as well. Let's look for percent of stocks under the 200 SMA. Here we go. Pull it up. Here's the 200 SMA. Yeah, we're way lower than we were in December on this. I'll pull up the candlestick chart and draw this out. Wow. So in December, we got down to like 33% at the lows. A stock below the 200 SMA Now we're talking about today, we hit down below 25%. And if you look at, according to FinViz, a little more accurate, it looks like, or at least more up to date, 20% in the stocks below the 200 SMA. Jeez, man. That's wild. So we got, again, but when we got that, if the same idea or play out happens here, we got a good bounce on a lot of stocks into that, next, I guess, technically a lower high. So even if we are downtrending, the bounce back should be decent. If we bounce back up and, next week have a nice bounce, there could be some really nice setups there. And also, again, taking into account, right, this being, by the way, the Dow just, as we were talking, the Dow just popped right back, and now it's back at the highs. This could be, well, I'll go to SPY because everyone probably, S&P is a little bit more, I guess, well-known in a sense, and everyone kind of talks about SPY all the time. We talk about SPY a lot as a reference. But this could be like that setup, though, even if we do go and go lower over the next couple of months, right? That could be a big bounce back. And also with being, if it is a fourth week in a row of red, we haven't seen that very, very often. So if we had to make bets, let's just look back at this chart. This would be a fourth red week in a row. Again, going back to the pandemic crash, we actually didn't have 4 red weeks in a row. We almost did, but the second week of this big move down was actually slightly green. And then we had 2 more weeks after that pulled back. So technically it wasn't 4 in a row, but it was close. You have to go back to this span right here, which wasn't a huge dip, back into 2019 August, and then back into, looks like May, end of May, 2019 as well. Those are 2 4-week spans of red. But we have, again, if you go back after that, then there were some really nice bounce back weeks, right? These weeks right here, choppiness in 2018 into early 2019, very, very choppy, got pretty nasty for a couple months, but there still wasn't 4 red weeks in a row. So even after some of these big red weeks, or big drawdowns, there were some good bounces, So that's what I would say is if we do close red on the week, which means SPY would be under 438 roughly, chances are, just looking historically, chances are we're green next week. That would be our chances. Now, again, we are putting in a doji candle right here on the chart here, which is essentially when you have a big move down. I'll zoom in so we can see it a little better. When you have a big draw down, wick down, a big wick up, and you close kind of in between. So you're setting up with a doji right here where you're actually opening and closing pretty much relatively the same spot on the week, but we had range up and range down. These are generally signaling either big moves up or down, a potential trend reversal. So you kind of had a doji candle 2 weeks back, which was followed by the next leg down. So I would expect that next week isn't going to be just a little choppy week. It's going to either be the next leg down or we're going to bounce right back. I think we'll be back up in the 450s very, very soon. So I think you're kind of setting up for either way. And you could play it both ways. I'm sure you can play options both ways. And there's plenty of option strategies that you can take out there that say, okay, well, I know we're not going to sit still, but I'll play it. If we bounce up a ton, I'll make money. And if we dump a ton, I'll make money as well. There's strategies we can play. We can even look at some of those too if we want to. Into the close. Wouldn't be a terrible idea. My bets would be a bounce back week, just historically looking at, 3 red weeks in a row, 4, potentially 4 historically. So I would want to be thinking that way. But again, with potentially the Russia fears and everything, who knows? It could be a washout. All right, let's see. Interesting. We're getting up there. We'll see if we can push through, though. This could be a wild close as well because, we could have a lot of, if we do break the range and we do break the highs, you can have, it's the opposite of what we've been seeing right in the past couple of days. So you could have a lot of panic buying or covering or, getting out of puts or covering shorts and whatnot, not want to hold over the weekend and not want to worry about it. So that is an idea to think about too into the end of the day. Labu, look at that. Labu's back up 2.5%. Look, but you see how crazy this is though? Like you guys see, like I have calls, I have $20 calls. I understand how risky that is. Yes. I understand how volatile this is, but like the thing was down a half hour, an hour ago, was like even on the day or down. Now it's up almost 3%. I mean, in options world, the volatility there is nuts. Let's see if these options, the option charts have been super weird. But just today alone, though, volume wise, it's pretty substantial. We're seeing like a decent couple blocks of like 200 contracts being traded here across the board on Labu. These are $20 calls for March. I was seeing something else there. Oh yeah, I was seeing that on the SPYs, on the SPY calls, the SPY 500 calls. Look at this. So when you have, these are the option charts, the charts of the option chain essentially, or the option, price. They're very thinly traded because options are not going to move as nice as the actual underlying stock, right? Generally, SPY does. SPY options, the weeklies or next week, they generally do. But look at these. These are like some volume spikes. So we got some decent buying right here. 3,500 contracts were bought. And these are SPY 500 calls for June. A couple of these spikes, 3,000, 2,900, 2,200, 2,000 shares, 2,000 again. I keep saying shares, contracts. And again, do the math, right? I have 3 at an average of 177. So do the math on that. That's like roughly a $500 and something cost basis. Picture someone snagging 3,000. It's a decent chunk of change for a very far out of the money contract, right? These are potentially, lottery tickets almost for some people. I don't like to think of a lot of stuff as lottery tickets, to be honest with you guys, because I just hate that. I hate that thought process. It's really not. I don't think it's. Oh, look at that. By the way, SPY hit a new high. So SPY just hit new highs. Let's see if it can continue. Because when you think about it, and if you're thinking in lottery terms, then you're probably putting yourself in a mindset that this isn't a high probability trade. This is a lottery ticket. It is what it is. I don't need to think about risk management. I don't have to think about taking profits. I'm just going to let it do what it does. That is not. Some people can play that and can do that very, very well. I don't like that. Now, if the way I see that you can maybe go for that, right, is if you made some money this week, I can see it being a Friday 0 day to expiration play. Like let's say I was up $100 this week, for example, on just day trades, and that was all cash, right? And up $100. I look at myself and I say to myself, on this dip, let's say at the view up, and let's say I think SPY is going to go higher. I think we're going to break out of the range and go higher today. I can buy some 0 day to expiration, 440 calls. They'll probably be pretty cheap. When SPY was at 432, they're probably pretty cheap. They're probably under $1. Let's check them right now. The 440 calls right now, they're 35 cents. I'll risk one contract on that. I made $100. I'll risk 35. And if that 35 turns into, 65, 70, I'll take those profits and move on. That's kind of how I see or would like to think about a lottery. I don't like when you're just taking a random lottery. Like, yeah, I think, these SPYs for this time, this next month, or this contract or this stock. It's like you're building bad habits that are ultimately, you don't realize it, but they're just terrible habits to have and to build. And you're just almost throwing away money just when you do that. So I always like to think about it a little bit before I take the position. Is it a lottery or is this a calculated decision? Do I have a risk in line? And it could still be a contract that you're going to let expire worthless on the downside, or it's going to go your way. It could still be something like that, but you have to know going in, okay, I'm willing to risk X amount of dollars for this trade. Alrighty. I wanted to pull up. Also, we were watching oil. I was thinking, or even natural gas. People were talking about the storm this weekend for the East Coast. And I thought that was a cool idea to think about. But potentially, right, here's Boyle. Potentially that run already came the past couple of days. And I didn't really think about that much, but it makes sense. And that was a good idea. And I have surprisingly enough for some people, I have a weather background, so maybe I should have been on that. But I unfortunately was not. I will still say, though, my best play of all time, which technically isn't my best gainer, as I had a much smaller account at the time, my best stock of all time was PPSI, and that was back here. Before a hurricane hit the Gulf, I was like, hey, this is going to be bad, and this is a generator company. This is going to be bad. This is going to be a nasty one, and I like PPSI, and I was buying it here at like 130s, 140s, something like that. And the thing went from the 130s the next day. It went from that level to $9. It was like a 500% trade. Now, of course, I sold like most of my shares at like 2-3. And I sold some of the 4s, but I'm like, that was the most insane trade ever. But that was all because of the hurricane. And use my weather knowledge in a sense, right? Most people don't like to look at models and stuff like that. I just have the background, so I look at that stuff all the time. I'll forecast myself. So people are like, yeah, I look at the Weather Channel. That's cool and all, but like I don't rely on that because I know how to forecast myself, and I just know how to use models and stuff. And I know how the Weather Channel is getting their forecast. They're basically using models to pull up to make you a forecast. So I'm like, okay, well, I can interpret the models better and have a better feel for, okay, what can actually happen here. So, it's fun, and I probably should be thinking about how do you apply that more to some of my trades or some trading, but I missed out on the natural gas idea. But I'm not sure how much of a correlation it really has, but you got to be early too. So today you're seeing a sell-off there. You kind of got to be early to that party, or else sometimes it doesn't work out. If you're jumping on late, things already up a big chunk, you're too late. You are too late, my friend. Alrighty, so we still had more stocks hit new lows. 1,501 stocks now have hit new lows. That's actually up a few from the last check. Despite the big day, right, across the indices, we're still almost like 50-50 in terms of advancers, decliners, which is pretty meh, because you kind of would like to see, more stocks advancing. You want to see more like a 75-25 type of day based on how the market's looking right now. SPY up 1.25%, NASDAQ only up almost up 2%, Dow almost up 1%. You kind of hope for something a little better than that, but that's what we got for now. These dips seemingly keep getting bought up on SPY here into the close. Pretty interesting. Also, think about too. My airlines, man, today saved Spirit. My Spirit Airlines just took a little tumble today. I'm a little pissed off here. This hit new lows, relative. I'm interested in what's going on here. If there's a bigger picture, thought process going on, I don't know. But that was a little concerning, so I'll be watching that. But JetBlue, by the way, though, Spirit Airlines is more volatile. Funny story behind this one too. I took my first Spirit flight ever last week on Thursday. I got off the plane. Okay, I have a position there into 2023 calls, but I got off the plane. That's what this is. I got off the plane. I'm like, hey, Spirit's at 24. Market's down today. Hey, is it a coincidence? This is my first Spirit flight ever, and Spirit's up 6%. I don't know. I don't think so. And of course, I literally thought that. I tweeted that and then literally just tanked. It was still finished green, but it tanked. And then it broke this trend. And this week has been nasty under the 50 SMA. So now it's going to recoup that 50 SMA and then get up over 23, 24. And then it can reverse and have a nice little period of time. I still think $31 is a target level. I know it looks wild. It does. But broadening the picture out, it had a bigger move this time last year, so I wouldn't be surprised if we get that move. Market's got to cooperate though a little bit. So JetBlue had earnings. JetBlue actually beat earnings yesterday, so I was excited to see that, and it's been stronger. So across the airline, sector, JetBlue has been much stronger. Here's JetBlue's chart. We just saw Spirit's chart, and look at American Airlines. Hit new lows today. So JetBlue has been the beast, or at least the stronger play out of the airlines, which is actually funny because it's my largest airline position. So there you go. I don't want to say I got lucky, but to some degree, I kind of got a little lucky in terms of that one being one of mine. So American Airlines is an interesting one, how it's been falling off a lot. There could be a bigger storyline there, or maybe there isn't. Maybe this is the dip before the rip. I don't know. But I'd be watching that. JetBlue had good news or had a good earnings yesterday, and then the market choppiness, it kind of pulled back, and the airlines were down, bigger earlier today. So it's recouped a good bit of that. Here's a 5-minute chart on it. It's recouped a good bit and kind of just grinded up. It got above VWAP and has been trending over that all day, which is good. But something to watch. I mean, I'm happy with the earnings and the projections. They believe that March is going to be a very, very strong month. I believe stronger than last year, from the CEO said, is their projection. So that's good news. But again, we kind of need a little more juice on these guys, because I still like them. I really do. But the market's got to cooperate, and they were holding up better than many stocks a few weeks back, but not anymore. Seems like, well, I guess the whole market's just hasn't been holding up. So there's that. We'll see if things stabilize. I'm going to see how that plays out, and then we'll have to reassess them. So what is a bomb cyclone? A bomb cyclone is like a made up term. It's just for the media's attention. Literally, all it really means is you can have, it's not technically like a term. It's been like, I guess, created as of late, but the whole point of that is like you have a rapidly strengthening low pressure system that essentially reaches like a very high amount, or at least like a certain pressure change over a certain span of time. And if you get that, you kind of get the term bombing out or whatever they call it. And it's like if you drop over a certain number of a certain level of pressure in a 24-hour period, you have the bomb, you're bombing out, whatever it's called. That's really all it is. So out on the East Coast, off the coast of Long Island, Cape Cod, you got some, you generally can get some very, very strong storms out there in the wintertime. And they tend to strengthen pretty good. And that's what you kind of got going on right now up in the Northeast. Do you go live at the same time every day? Monday, Wednesday, Friday, roughly like 1 p.m. Central, so I guess 2 p.m. Eastern time. I'm in Texas, that's why it's Central, but for me, like roughly around that time is the same time into the close. I figure the close is better unless there's some news or something going on. If I have a chance, if I can get in the morning, but I figure the close is better because first off, it fits my schedule better. And probably fits more people's schedule better, I would imagine. Morning time, most people school, work, and whatnot. So I figure that the market opens probably not the best time to be going on to be streaming, and it works better for me too. So yes, roughly and then Sunday nights, we'll do Sunday night lives. This Sunday, I'm not sure what time we're gonna do because playoff games and stuff. I'll have to see. I'm also gonna be away for the beginning of the weekend again, unfortunately, and then I'll be back Sunday though, so we'll do a live Sunday before next week. And we'll talk about futures. I want to make sure futures are open when we go live. So it might unfortunately have to be during one of the games, but maybe during like halftime, I'll like start the live. It'll be relatively short, and then that's it. We'll cover what we got to cover, and that's it. And then Monday we'll go live in the afternoon again next week. And then next week, what is next week? No, next weekend I'll be away again. I'm going to Montana to visit my brother, go skiing a little bit, Big Sky. That should be fun. But so it's been a little choppy. But I mean, ultimately, right, once we get to like mid-February, I have no plans for a long time. So I'll be around for a while. Good luck, fellow traders. See you, Beach Rum. Awesome call on Boyle. That was nice. If you guys missed that, hopefully, well, that's the whole point of really what it is. And what we do on these streams and stuff is that, we have some great ideas tossed around the chat. Beachrum talked about Boyle, back when it was up here, back when it was in the mid 20s, and the thing popped like 100%, right, from that level. So killer trade there. We talked about it on one of the lives a few weeks back, and it's been setting up for a while. You had even like two opportunities. You had one opportunity here from the 24s to 38, and then it pulled back into the 25 range again, and from 25 went to 45. So killer trade. Whoa, SPY just popped. Look at that. Look at these candlesticks, by the way. I'm not surprised. We got 30 minutes to go to the close, but look at that. I mean, we got wow, that's a pretty big range. Over $2 range inside this 1 5-minute candle. Something's going on here. We got I think we're getting some panic buying or just some short covering into the close, I think, going into the weekend. People don't really necessarily want to be short if they are. And we're seeing a trend reversal, right? Everyone kind of thought if you played puts on this move, you made money as long as you weren't stupid and you kind of average up, or average down in this case on puts as it went up higher. And now that we're going higher, I wouldn't be surprised if SPY closes this week closes today up 2%. I would not be surprised. It very well could. But 438 is our level to go green on the week. So it looks like now if we go back to the weekly chart here, we are now this candle on the weekly chart is green. So if we are now green on the week from the open, or I guess from last week's close to now. As crazy as this week has been, it kind of was a nothing burger if you were just in the S&P and that was where all your money was, and you just are in SPY or like VOO. Honestly, your account would be the same unless you got dividends. I don't know. The same as where it was last week, roughly right now. After all of this nuts, crazy Fed and dip on Monday and crazy 3% down, up and left and right, you would be technically even. All right, let's see if these numbers have changed at all. Yeah, not really. A couple more stocks hit new lows. That's all I can kind of pull out of that, despite the market going to highs on the day. Let's see if we can find some other interesting stuff out of this chart. Okay. Inside of this, what do we got? Anything noticeable or really notable? I mean, the financial plays, MasterCard, Visa. Visa had earnings. They killed it. I'm not sure. I wonder if MasterCard had earnings. You can pull it up. Seeking Alpha. Seeking Alpha. I wouldn't be surprised if they did. Let's see. MasterCard Incorporated press releases yesterday. Fourth quarter and full year results. Yep, they announced earnings. They must have beat their earnings, or at least there was some good news coming out of that. So that and Visa are up pretty nicely today. In the credit services sector, PayPal's up a bit, market's up, so kind of makes some sense there. Apple with the earnings yesterday, nice day. CRM, I like this one, guys. CRM is another one to think about too. I'll go take a look. Well, I'll pull the chart up here on FinViz. All right, so CRM is very, very similar to Affirm. Not to mention Nancy Pelosi and her husband, guys, they bought in to some calls out expiring. I want to say, let me look this up really quick for us because I know we can just pull it up and we can see where they bought. But let's go to this page, search reports, Pelosi search. And I got to put the year in. 2022, I believe, was the filing year. Yes, they did this. Maybe not. Maybe we got to go back to last. No, they didn't. This is not. We got to go back to that last filing from 2021 from December. Okay, here we go. So they bought, her spouse, her husband bought, where are these? Google, okay, cool, Micron, whatever, Roblox, they're all down, I think, the market's down. They're all down, so they're down pretty nasty on these positions. But they bought CRM, Salesforce. They bought a decent amount, a couple $100,000 worth, 100 call options at a 210 strike. Okay, and these expire these expire January of next year. This is nuts because they bought a 210 strike, and this is back on the 20th of December. Let's go back to look at that time. Okay, CRM on the 20th of December had a nice day today. On the 20th of December was right in here. Okay, it was a red day. This was at 247, 240, whatever, roughly 247 was where it was at when they bought it. It's at 220 now. It hit 207. They're down a good chunk on these options. They're down a good chunk. And I actually have it written. I can pull it up. The reason why I say it is because for a bounce back trade, right, they're in with like hundreds of thousands of dollars. Now, could they be wrong? Maybe. They made millions and millions of dollars. So, what's a $100,000 loss or a couple $100,000 loss for them? Probably not a big deal. And they got a lot of pressure, a lot of eyes on them. So there's also the speculation or the camp of thought that, okay, let's have a couple bad calls here. Let's lose some money to get everyone off our backs. And then, let's keep doing it next year. I don't know. Just tossing an idea out. But I remember I have it written down for that video that we talked about it. I will pull it up here in a second. And then I will see exactly their here we go. They bought the 210 strike. They bought 130 calls and they paid $30 roughly per strike. Let's pull them up. Let's pull up those calls. They are these are the ones right here. 2023, January 20th, 210s. 210 calls out to that point. They paid roughly $300,000. Okay, let me look at the call side here and I will pull these up because something doesn't make sense in terms of this price point. Let's just look at this chart. Okay, back on that date, they were roughly they were $56. Okay, sorry, I was looking at the wrong one. They were $56 per contract. They bought them up in here, right? Actually, this literal volume candle of 132 contracts, that was literally Paul Pelosi. So he bought it like 57, 56. They're now worth 36. So they're down a fat chunk on those. Quick math, I will pull it up. If we do the quick math on that, they are down. Right now they're worth 36.8. So we do 36.8 times that by 100 in options terms, and then times that by 100 or by 50, or they bought 130 of these contracts, by 130 contracts. So their position is now worth $478,000. They initially paid $733,000. They're down a couple $100,000. Pretty nasty on that position. But again, if they're down, right, and you believe that they're not going to lose that big on a play, well, take a position in those right now, or just take a look at CRM calls from here for a possible bounce zone, and you could be looking at a juicy return. If they end up going green and making money, well, if you buy now, you'll make a lot more. So I like CRM, to be honest. It's given back a ton, right? And it came right down into a nice range too. It came right down into this zone that we kind of had the lows from earlier in 2021. Right into that range. I like it for a move, honestly, to 250. But 250, I think is very reasonable. This little gap fill, I think we'll get that 243. 250 is a good spot on CRM. And then I like CRM and Affirm, AFRM. So these are two that I'm looking at dips going forward and saying to myself, I like dips on these two stocks. For the bounce back trade. And look at Affirm, by the way. Affirm is going up and maybe going to go for a new high here. And let's take a look at SPY. SPY, as we speak, is hitting new highs, literally hitting new highs. So we are potentially 50 cents in the green in terms of closing this week up. We'll see if that can hold up, though, as we close it out. But it's a good sign, though, across the board. It's a pretty nice sign to see this little action if you're bullish. If you're bearish, unfortunately, this is not looking good for you. But my speculation was that, hey, we could look at, we had two options here. We kind of break below the lows and go for a pretty nasty dump today, or we may break the range, and we broke the range now, or at least we didn't really break the big range from this week, but break the highs, back up to 440 is kind of our level. 440 to 442 is kind of our level to next week. But it could be very, very possible that if we close very, very strong right now, and no crazy news comes out over the weekend, we could gap up and be at 445 at the open. Just based on how things have been, which it wouldn't surprise me if that happens. So we'll see how this ends up closing. We've got about 18 minutes roughly until the close. The Nasdaq is now up over 2%. The Dow is up over 1%, and the S&P is up 1.69%. I was just going to go check back my airline guys, how they're recovering. Oh, Jetblue might even go green if we close strong here. Interesting. Save is still down a good bit, but it's coming back. Coming back off those lows. That could have even been a good day trade. I was just, I wasn't paying attention for that. American, how's American doing? American was getting hit pretty hard this week. Yeah, it's coming back too, trying to break the range of the day. It's right up there. It needs to get back up and a little bit further for that. Small cap land, not much. Some IPOs that are running, but not really too much. IMPP, I don't know. TKLF, 32%. Dave is like a SPAC, I believe. It's been bouncing around a lot. VCNX. What's VCNX chart look like? Yeah, interesting. Oh yeah, XELA. I was saying, I kind of like it, right? I was saying like on last stream, I would be watching it. Look, by the way, look at that. I was saying watch this stock for a possible, hold, a level it holds up, and it actually ended up being. I drew a line in the sand at 60 cents. It ended up being this level right here, like 54. 54 cents was our spot that it kind of firmed up and it didn't break below. And, that was your area to think about a risk. And now look at it go. I wouldn't be surprised if this goes for $1 plus next week. Obviously, do I like my risk reward right now compared to what I could have got this morning? No. I probably could have got this thing under 60 cents and I would have felt a lot better. But that said, though, this thing, it's a little squeeze out. This could be looking like a big move. 75 is the next break. Over 75, I think you're looking at a magnet to $1. That wouldn't surprise me. And the volume, let's see the volume, how the volume is in the past couple of days on XCLA. Pretty good. The volume was nice. Today is, 52 mil. Yesterday we traded 64. We're probably going to get up there today if we close very strong. The day prior to that, 268. So we got some good volume on that one. And it's a prior squeeze candidate. It's a prior stock that's, squeezed before. literally just 20 minutes ago, if you were looking at this stock and you're saying to yourself, this kind of looks nice for a squeeze out, well, there you had it. You had your opportunity there. You could have got it at, sub 59, and now you got, you're up a couple percent just like that. And it's just looking at these stocks that have run and keeping them on your radar a couple of days later. What stock? This is XELA that we're talking about right now. And it's one that, hey, it's if you go back to the daily chart, it ran in the past. Had some crazy moves from 135 to 5. Not saying it's going to go to 5, but hey, if it makes a nice 100% move off of where it's at from here, it could be a really nice trade. Or a move to $1 would be nice. But you want to be selling into these rips, though, just in case. You always want to be selling into these rips. And if you're in, don't let it go below your average. Just lock in gains, unless you have a very nice plan and strategy in place, and you're going to risk it down to a certain level. But you don't want to go red on those types of trades. All right. Well, as we're speaking here, though, it seems like we're in squeezer mode. SPY squeezer, because this has been pushing up all day. Let's see. This is actually an interesting trend, too. Look at that. Not perfect, but it's pretty nice trend from this morning's lows. That was our trend line on SPY. Now we're at 439. We're going to go green this week on the week, looks like, unless we have a pullback here in the next 15 minutes. And this could be setting up for a little gapper Monday. We'll see. But I think if I had to make my bets, I would be betting, if I had to buy a Monday expiration contract on SPY and I had to buy 440 calls or 440 puts, I'd buy calls. If I had to. I have other contracts that I'm covered on the long side, so I don't need to do that. But if I had to do it and someone said, hey, put a gun to my head and said, hey, you got to do this right now, I would go calls. Bigger picture, though, here's the daily chart on SPY. Let's look at the daily. It's still in this range. So again, right, until we break out of this range, we are still in this range where we have the top of our range at the 200 SMA on the daily. Bottom of our range here is like 427, 430-ish, roughly. A bunch of wicks below that 420, below 430, but bodies of the candles are holding 430, roughly there on SPY. And as I said before, we could easily see a 2% update on SPY, and we very well be headed for that. We're now up 1.88% on the S&P, so we can be very well headed for a 2% update here. When it looked like literally an hour ago, as we got on the stream or so, it looked potentially like we could be going red. And now we're going up 2%. Just, welcome to the stock market for those who are new. Do I like coin headed? I don't know. I personally haven't followed coin very close, so I can't say. Unfortunately, my guess is that they're going to be, how's Bitcoin? Bitcoin's at 37.6 and ETH is at 2,500. I don't know. Based on how Robinhood's earnings were, I don't want to say that they're the same stock or the same company. They're not. But in a sense, user growth or user base is, I would say, kind of similar. So I would be a little bit I would be willing to watch the downside there and be careful of that. I don't know. I wouldn't want to be betting bullish on that on Coinbase. So personally, just because of Robinhood's earnings, I just would be careful there. But I don't know. It's down a lot. How much more could it go down? I don't know. Maybe this holds up, and maybe it pulls a bad earnings and it rips. Robinhood had earnings. If you let's look at Robinhood's chart, by the way. Robinhood had earnings, right? But they technically missed on a lot of their thresholds. But the stock went from where it was closing right here around 1160 to 977, and then from that level it went 30% the next day from those lows. So I don't know. It's just nuts, the range on these things. And the S&P is now up 2%. So that projection of a possible 2, look at that, just going straight up parabolic into the close. 439.94. We're probably going to hit 440 now on SPY. Pretty nice finish here. For the longs, my Affirm is killing it. I have a $60 call in my Robinhood portfolio. That's up like 100-something% already. There's 440 on SPY. Oh, it just broke and went 50 cents higher in like a second. Oh my gosh. Is there still 10 minutes till the close? Could we see a 2.5%? 2.5%? No way. Do I dare say 3? Can we get a 3? 3% update on SPY? thinks the coin is gonna can kill it. I'm not saying that they're the same. I'm saying that like the problem is like the user base. I feel like you have the sentiment shift, not sentiment shift, but you have like all the people who are using Robinhood are just like, oh screw it, I'm losing money, so I'm out. You got everybody on Coinbase who bought Bitcoin at 60K, who's now like, oh man, I'm down, whatever I am. Like that's the idea. And then these companies, a lot of it really is based on long term won't be, but in the short term, the fluctuations in like user growth and the projections and all that stuff, who knows? I mean, that's the whole thing. I like Coinbase over Robinhood, right? As just a stock. If you were to pick a stock, I would prefer Coinbase over Robinhood because I'm not a big fan of the CEO of Robinhood if I had to pick, but I still think Robinhood could be a decent bounce stock from here, or it already bounced too much today. So on pullbacks could be a better bounce, could be a bounce play. Coinbase, let's go back to that chart. It hit lows, right? And if you believe that, crypto is going to be around and is not going anywhere, then yeah, you're at a good, spot to start picking or to pick this up. I just personally have no interest in messing with earnings. So just how we've been seeing stuff. If you're going to trade earnings, the options are pricing in huge moves up and down. So it's almost not even worth options. We saw with like Tesla, Apple, Microsoft, and like you had these crazy moves. Tesla was a little bit different because it had a trend day yesterday after the earnings. So yesterday was Tesla's dump. So if you had puts on Tesla, technically speaking, you opened the day down pretty bad, and then it just tanked, and then you went green if you held your puts throughout the day, if you bought Tesla puts before the earnings. But, did we know we were going to get a trend down day like that? No one really knew. So many people probably, the day open, they realized that their puts are done, and they just got out of them, only to realize that their puts would have actually printed if they held on. That's playing the earnings for you. Pinterest. Let's see. Pins. I don't know. I've been hearing a lot of chatter about Pinterest. We got a little box we drew in here. Oh, that's the gap fill. It almost filled the gap. So it's actually coming down, honestly, to 25 is potentially a bounce spot based on the chart that we're looking at here. I haven't looked into it, though. I have no idea really fundamentally what's going on here. But chart-wise, $25 is the risk. So if you're taking a position now, I'd risk 25 roughly. Give it 2 closes below 25, I'm out. If you're playing calls or puts or just shares. And then I think you can get a bounce back to the 50 SMA. We've been below that for a while. So a 50 SMA right now is at 35, 36. That will come down over time. So you might meet, in the lower 30s for a bounce play. So I kind of like that chart, to be honest, if I had to say. Bought the first Leap XL on 2024. How is that chart looking? Oh, wow. I didn't even realize this thing is down this much. I haven't been paying attention to this guy. But 2024s are nice. I mean, I think realistically, if you're going to play leaps, on stuff like, in the money, or even if you're out of the money a little bit, who cares? But playing it like 2 years out or a year and a half out is the longer the better, honestly. I mean, I have some plays on Penn, and the Airlines are 2023 leaps that I bought, like a couple months ago that are down a good chunk right now with the market, how it's been. But they can easily bounce back, and they could be back up to like, those things could go up 50%, and all of a sudden I'm fat green on them. And it's because the option is going to be super volatile on it, but you can handle that volatility and play it. And I think it's a supreme strategy to playing shares on certain stocks in certain circumstances with certain risk management, right? But look at the S&P, just straight up into the close, absolutely straight up. I think that the leap strategy is what I'm going to be probably going for in the longer term, or in the IRA a lot more going forward. But we'll see. We shall see. I am going to pull. Crazy move though. We're going to go we might go 2.5% green on SPY. That's a pretty interesting, it's a pretty nice day. And now we'll see if next week we got to break the range. So we're up at the top of the range now from the past couple of days. We're up towards the top of the range, but you got to break that. And if we break that, 450 to 455 is coming pretty fast, in my opinion. And the strength we're seeing right now, I would say that's probably likely we see that Monday, Tuesday, honestly. We can get a touch to that level based on how SPY has been. So it looks like so far a double top right now at that 440.95. We got to break that and then go higher into the close. But we got 5 minutes until the close now. So funny day though. If we look back to the asset or just the FinViz chart right here, despite the green across the board, right? Yeah, we're getting a better move on advancers decliners, but still not as much as I would think you'd probably see more 75-25 or 70-30 at least. We're getting closer to that. But look at this. We have, over 1,500 stocks hit new lows. Pretty wild, These numbers are coming back. The 50 SMA a little bit. We're seeing a little bit more. We're down to 15% earlier, and we're down to 20% below the 200 SMA. But now that's coming back a little bit into the close. But still crazy low. We're down below areas we saw in December, which I thought we were at lows in December. We saw we went lower than that. And stupid enough, I finally, not that I figured it out, I just never thought about it, of getting rid of this bar at the bottom of my screen, like the toolbar or whatever it is, like all the apps and stuff, to make my screen, because I would always have my screen set up to where I had my platform or whatever window, I'd have it stop here, and I'd have this pulled up on the bottom of my screen, the widgets or whatever, and I'd cut my screen off. Now I got rid of it so that it's always hidden unless I put my cursor at the bottom of the screen. Stupid little thing that I just finally thought about or figured out yesterday. 441 hit. Oh my, 2.3% on SPY. Can we get in the last 4 minutes? Can we get a 2.5% day? Jeez, man. Let's check in on the Labu, because that's honestly my favorite play, because it's not my biggest position, but it's my favorite. It's my biggest potential gainer, right, in the coming months, the coming 2 months. This is, oh my gosh, it's up 10%. Look at this thing. What's down today? It's now up 10%. I have $20 calls here, and on my Robin I have $17 calls. So those are up. Where are those guys at? It's at $2 now. So I'm actually, right back to my average. It was at 134 earlier today. I bought these at $2 I bought them at 210. I sold one at $4. I think I sold it at 420 on just before Powell spoke on Wednesday. So I made $200 on that, and then I bought that same contract back at 190 yesterday, or I think yesterday. And now we're back at $2. So we're right back to roughly my average, but I think we can see more on that thing. Look at how strong that close looks. NASDAQ is up almost 3% now. Wow. We got 2 minutes to go into the close. Can we get a last push on SPY and close at the high of the day? Pretty darn close if we close it right here, though. Do you think algos are getting better at shaking people out? I don't know. I think a little bit, but also I think a lot of people are just shaken out in general as we speak right now. I don't know if necessarily they're getting better. I think that there's always tweaks that are being made to them, but I haven't seen, at least in small cap land. I know in the overall market we've been seeing some crazy volatility. I'm used to small caps. I haven't seen anything as bad as I've seen in small cap land, the knives and all that type of stuff, where you have stocks that are making nice trends all day, holding VWAP really, really nice, going for a new high. It breaks a new high for a second and then knifes down 10%, halts down. Those are nasty moves. Whether that's someone just, market selling, I don't know, but there's some crazy algorithm shakeouts, and you see some crazy stuff really across the board when it comes down to it. In small cap land, obviously, I don't know in large cap land how that is. At least I haven't noticed anything like that bad. So I don't know. There is a lot though, I would say, in the option world. There's a lot of manipulation there. If you guys are always thinking about manipulation or worried about that to a big degree, in option land, that stuff is so manipulated in terms of these things you'll have crazy days, crazy weeks, and then you'll just they'll expire at certain points just to make sure, that the where all the volume's at doesn't go in the money, it's just nuts. The option time decay plays, playing spreads or playing some of these time decay strategies for options is killer. That's what I would say in large cap land is one of the biggest things in terms of manipulation that I've noticed. So SPY closing up here just shy of 2.5%. Just shy. 2.48% on SPY. We closed up over $10 on the S&P today. The NASDAQ was up 3%, up 400 points on the NASDAQ, closing at 13,770.57. NASDAQ's chart, by the way, we're still in that range. So we are still in that range, but today, earlier, didn't look too good. So next week, we're set up perfectly for next week. What happens? Break above and go up to these next levels, or do we stay in the range and do we get rejected come Monday? And I think a lot of that could be in the news cycle. So we'll see how that plays out this weekend. Like undercut and rallies for technical traders. Yeah, I would say that's very. It's always kind of a thing. I haven't noticed that it's been better or worse or whatnot in terms of that stuff. I would say that like I haven't been day trading very much this week, honestly, like at all. Maybe actually in the Robinhood account I have, but like it's I only got like 3 day trades per week on that account. It's a small one. So, but like I would say that you'll definitely see like stuff come like here. Perfect example. VWAP, S&P today, VWAP, it dumped below VWAP. And then I know a lot of people probably looked at this and said puts, because you had these 2 5-minute candles that got up and couldn't break above VWAP, got up there, then pulled back here. So if you were long and playing the VWAP bounce, you may have gotten stopped out because you saw those two candles, I'm out, and then it rips. Or if you're short, this tells you go short, go short, go short. Next thing you know, you're getting squeezed out and you got to cut it. So there's stuff like that, I guess, that you'll see a lot more in large cap land. Not that VWAP has to be the perfect bounce zone, but it's kind of a magnet and it's kind of a springboard potentially for some of those spots. Will the stock market bounce hold? That's the ultimate question for next week. To me, this is the setup, right? So you had a very interesting week. This right here was your trap potentially. You had your trap for shorts because, hey, you had a nice up day, and then, of course, it started to look kind of nasty, sold off, and we almost went red. The Dow went red, actually. Almost went red, looked pretty bad, looked pretty gloomy. That bounce holds. So everyone who had puts towards the highs, right, is okay, oh, great, I'm making money. They probably made some money if they're smart and they locked in gains at VWAP. They get stopped out, or they look to reload puts again. They reload puts here at the highs again. They get squeezed out into the close. Okay, we're squeezed out, whatever, I'll rebuy my puts for next week at the end of the day. You buy puts again here at 442 at the end of the day, you go to bed, you have a nice weekend, you go out to the bar, you have a drink, right? Now you come back, it's Sunday night. Football games are on, you check your phone, you check futures. Futures are gapping up 1%, and next thing you know, you're like, wait a second, I'm short, I got to get back in long, we're bouncing. And now all of a sudden come Monday, the panic buys hit, and we can have a big day Monday. That's a potential idea. Speculation idea of just playing like, okay, everyone's short, range breaks upside, and here we go, bounces on. Again, we're still at the top of the range. So based on this week's history, puts right here make sense until they don't. So if you're playing puts, it makes sense. Technically, it makes sense. But that will work until it doesn't work. And I think a lot of people potentially right now, based on sentiment and all that, are pretty bearish. And so that's why I'm a little, I want to make sure I'm more, I guess, biased to the long side in the short term if I had to be. Not that I have any like super short term longs other than like a March calls for Labu, and then I have a firm calls for next week, but I was in, pretty small in those. And they're already up. Those are firm calls, by the way, that I had for next week are already up 150%, which is pretty nuts. So that's just today. So that's killer. On time and sales, Weeble's the green and red. I actually don't know. I was trying to look that up before, and I haven't been able to get a good answer on that, to be honest with you. That's new. Like, that hasn't been happening a couple weeks ago, and all of a sudden I started noticing that. I would guess that it maybe means that in terms of those the big blocks that are coming across in terms of buys and sells. The greens, though, from my at least prior knowledge was the greens were buys on the asks or were buys at the ask, and then the reds were the bids. I don't know though. I'd want to look into that and just confirm at least on Weeble's somewhere. I'm sure they have a forum somewhere. I can look it up. But then they have those like blocks those solid colors that come across. I'm not really like this right here, the reds and the greens. Like I don't know what those are. Those blocks that are highlighted. I have no idea, honestly. All right, let's see. Back to this, and then we'll wrap it up. So finish the day across the board pretty good. Almost 2.5% on SPY, on the S&P, over 1.5% on the Dow, and then 3% to the upside on the NASDAQ. Across the board today to finish it out, 60% of stocks advanced, 35 declined. So still a decent, disparity there. a lot hit new lows. 97% hit new lows out of stocks hitting new highs or new lows. So you only had about 1,500 or so stocks that either hit new highs or new lows that were at the top or bottom of the range. And out of those, 1,500 hit new lows and only 44 hit new highs. So the same story there, despite the market being green. But that's really across the board. Here's the final look in terms of the heat map. Green across the board, but that green is heavily weighted towards the bigger names, the large caps that drive these indices. So even though, right, we're green, there's still a decent heaviness, I want to say, underneath the surface. That said, though, I appreciate everyone for tuning in. We will be live again Sunday night and then Monday, so stay tuned for that. Tomorrow's video, I'll have an update on the portfolio, what we're in, what we're not in. I cut out one of my small caps. I have some of them. They weighed me down for sure this week, and the airlines actually didn't help. Airlines had a pretty nasty week as well. So I believe last check I was down, but we'll see where we're at as we finish up this